Hey, good afternoon, everyone. Sam here, and I'll be kicking off the state of the market for December 7th, 2020. Can I get a confirmation you guys can see video and hear audio, please? And then we'll go ahead and get started. Just leave a comment there if you can in the in the chat, and just so I know that the audio video is good. You should be able to see SPY here, and okay, looks like we're all good. Okay, good stuff. Thanks, Michael. All right. So let's dive in. Thanks for stopping by, guys. Appreciate you making some time for us. Looks like we're all good. Okay, thanks, Chris. All right. So this is what we call the state of the market. We do this once a week, usually on a Monday, and it tends to be a little bit open-ended. What I prefer to do when I do these is just to kind of go over kind of the big picture stuff, the indexes, things that really drive trade, and then show you a couple of things that I'm actually trading. So let's go ahead and start here. If you have any questions along the way, just go ahead and leave them in the comment section, and I'll take a look at them. So here's up is going to be SPY, and one thing I want you to take a notice of is SPY Weekly has actually fired long. So you see that those gray dots there. That's a form of a squeeze. That is considered a low compression squeeze. And when you get the green dots after that, that is a technical trigger long. In doing so, it's actually held trend really well. The trend definition that I look for is the 21 and the upper 2.5 standard deviation Bollinger, and you can see all the price action is well within that. So the weekly just gets a check. There's really not much else to look at there. It's trending perfectly. It is a little close to the upper Bollinger here, the 2.5 standard deviation Bollinger, which tends to act a little bit more like kind of like a 3 ATR. So it doesn't mean he can't get above it, but you can see that we're closer to the top of the Bollinger there than we are to support. So, there is some level of caution that should be taken here. But, if we kind of keep going down the list here, the weekly gets a check. We look for the same thing on the daily, right? So we define trend again by the 21 and the upper Bollinger is resistance. And you can see there that essentially all the price action has been held in that playing field. Not only that, but it's actually been held by the 8. So you see how the 8 and the upper Bollinger here are actually what's holding price. That's one of the more aggressive trends you're going to see. And when you see that, one thing that I like to do is go inside of it, go to one smaller time frame than the daily. Preferred is something like a 2-hour or a 130-minute. If you're familiar with that time frame, it's a really good one. And then just looking for more continuation there. So again, we get a check here, we get a check here. So on the 130, again, we're just going to do the same thing. Is it holding above the 21 and the upper Bollinger? And it is. And then everything else looks pretty good there. So we give that a check. And then lastly, we go to the hourly. And nothing changes, right? On a closing basis, is it closing above the hourly 21 and staying within the Bollinger? And it is. So it all looks okay here to me. One thing that I do want to point to your attention is going to be what we're going to look at next, which is VIX. But at least as of right here, right now, there is a little bit of room here to get above 3,700 on the SPX or 370 here. Basically, just kind of looking for somewhere, a shade above 72, 73. There's not a ton of room here, and there's no fresh squeezes. So you should be aware of that. So the time to really start layering on sizing and going bigger on trades is not necessarily when you're up here. It's really more when you're down here in the support zone. So I think we go higher. I think it gets there in kind of an ugly way. And it may not even go that much further in terms of, maybe it ends by Wednesday. But at least as of right now, the way we close today, all the structures have held. Looks pretty good to me. So then the next thing I'd like to show you here is the VIX. And I'll try to keep this to about 15 minutes. So we're about 7 minutes in. I'm just going to kind of breeze through the next two things, and I'm going to show you a couple stocks that I took positions in, and then I'll be able to take any of your questions. So the VIX here is something you should be aware of. You know, it's something every trader should be aware of, and it's one of those things that I look at for an early sign that things might actually be about to change. So the best signal that I have here on VIX, and see if you can point out on the daily chart here what you see is kind of a pattern change here on this chart. You happen to see it? The way that I'm looking at it, VIX here, you see how it's trending downward on the 8? So that's a pretty strong downtrend. That's what you want to see. But you see how today it actually breached the 8 for the first time since it started trending down after this candle break here. So a little bit of a potential change, excuse me, potential change here in VIX. I still think we go lower. The biggest signal that I have on VIX is right here, and it's the weekly, and it's definitely pointing lower. It definitely wants to go below 20. Because you can see here on the weekly chart, you actually have an untriggered weekly squeeze. Now, keep in mind, the VIX doesn't trade like other products. So the squeeze is more common on VIX because it trades more choppy, but in this instance, it's actually a legitimate squeeze. So I'm looking for this squeeze on VIX to take it sub 20. The question is, you know, for now until December expiration essentially, is what happens in the interim? How do we get there? Because does this signal here, you see how that we also have a signal here on the 130 that could actually trigger it lower again. If this signal fires short, and I was looking for it to fire short today, it actually was a little bit stronger than I would have liked to have seen. But if this signal fires short, it takes us pretty much till the end of the week. And you know, at these levels on the indexes, I think it's a pretty good idea to understand kind of 15 minutes at a time where you are. So in this instance, this is kind of what I'm using. A little bit of a yellow flag here, but then again, we don't really have any triggers to the upside. So definitely keep an eye on VIX here. If there's going to be something that tells you things might be in trouble, it's going to be VIX, and it should do it early. The fact that it's up today is a little concerning, but it's not enough yet. Next up is going to be the dollar. So as you can tell, like part of what I like to do with you guys, at least kind of in the short abbreviated session that we have here, is look at three major things. So choose an index. I'll usually choose SPY. Choose, well, the SPY is the index that I choose. Volatility I like to look at with you guys because it works hand in hand with the indexes. And then lastly, I'll take a look at something like the dollar. So for those of you guys that don't know, the dollar going lower is actually a really big boon for stocks. The reason that is because if you take the unit of measurement, which is dollars, you know, we price everything in dollars. If you take the unit of measurement and you dilute it by it dropping, inflation and otherwise, then it just makes things priced in dollars, which includes stocks, go up. So it has a very nice kind of tailwind to the stock market, and we just like to check in on the dollar to make sure it still has the potential to go lower. So let's just go ahead and do that here. So you see how the dollar and the VIX, they don't have identical setups, but they're kind of setting up in a similar structure. So once we zoom in here, you can see the dollar over here on the far left, and keep in mind lower here is good for stocks. It got to this bounce point, and it had about 2 months or so of trying to put in a bottom here. And do you see how in doing so, it actually went into a weekly squeeze, and now it's actually taken out that low. So because you have taken out the low, it basically just starts to then trigger the squeeze, which is now in place. So essentially you have a downtrend because it never broke above the 21. And then in the context of that downtrend, you went into coil or consolidation, and then you broke lower. So it's kind of textbook. You have, you know, normally you won't hold trend this well when you're setting up a squeeze. So to hold trend up or down, in this case down, hold trend and then build a squeeze and then trigger again, that's pretty classical signs of a trend move. So again, dollar and VIX are working together here. The question is, how high can the dollar bounce? Because do you see how you got the break of support here? You had a very nice little bit of a purge, but in doing so, look at all this negative momentum that you've introduced. So I like to call these patterns smiles and frowns. And in this instance, this is a giant smile. So you see how that kind of starts to shape the indicators, kind of looks like a smile here. So basically it just means that the dollar is kind of on an upswing, but I think it gets sold. So again, just kind of looking for warning signs because everything does look pretty good in terms of the indexes. And I can't say that I'm seeing legitimate warning signs quite just yet, but they're the precursor to yellow lights, if you will. So just the way that I'm adjusting is just trying to trade faster and maybe taking half size that I normally would. So let me know if you guys have any questions. Go ahead and put them in the chat. I'm going to go ahead and move on to some of the stocks that we've been looking at in the room and some of the stocks that I picked up today. So one that has been on the list. I didn't do anything with this today, but I should should as early as tomorrow. If you're in the room, we were actually just coming off a trade on this, but I think it's basically ready for the next leg, and it's going to be now. So there's a lot of stuff on this chart. Let me see if I can kind of clean it up a little bit. And looking for a breakout on now. Um, Holding structure well. It's been a choppy name. You can see up here on the weekly chart. Well, maybe the daily shows it best. You see how price really didn't go anywhere, right? You have these big swings, but price isn't doing anything. Well, you see how in the context of that, and we picked it up very good. We picked it up somewhere around here last week or the week before, I don't remember. And you see how it's now starting to hold the 8 in the context of what was previously chop. So that's kind of what you're looking for, right? It's basically just tipping its hand. It's giving you an early indication it wants to trend. And then you have this low compression squeeze so that it gives it that combustibility, if you will, or that coil. You already have weekly trend. Keep in mind how we define trend. In this case, it's an 8 upper Bollinger trend. See that? That's extremely strong. It never even comes back and tests the 21. So that's already a big check there. The daily gets a check, and then you start looking for sub-time frame squeezes. So in this instance, you have an almost perfect 130-minute squeeze right here. And then you have a very nice hourly low compression squeeze that's just starting. So I actually didn't get a position in this today, but this will be one of the top ones that I look at tomorrow. In terms of what I did add today, added some Etsy. So Etsy here, it doesn't really have a daily squeeze, but it does have daily trend. And I think this thing can get up to about 165. So I happen to have two levels of confluence there on Etsy at 165, and I think that's kind of where it's going. It's the upper weekly Bollinger, it's your symmetrical targets, et cetera, et cetera, big round number. So on Etsy here, I did the 155. Well, the one trade that I did that I think is most relatable to the most amount of people is the 155, 165, 175 call butterfly for next week and for this week, frankly. So basically, I like anything here on Etsy to the upside as long as you keep it somewhat short term. I probably would keep it to the December series at worst. But basically, just looking to play this pattern here. So you see how on the 130, again, we define the trend or lack of trend by holding the 21. You see the first test here, it held. And then what does it do? It goes to the upper Bollinger. After it hits the upper Bollinger, when it trades sideways, you see how it didn't really drop? Well, it did drop, but it traded more sideways into support, and then support caught. That's exactly what you're looking for. So you have weekly trend, again, defined by the 21, upper Bollinger. So that just gets a check. On the daily, you're already starting to trend on the 8, which is very aggressive trend. And then on the 130 and the hourly, same thing you saw now. Now probably looks a little bit more ready, but this one already has a trend behind it. So I did go ahead and add this today. I like anything long here in Etsy with a price target of 165. Some other stuff that was going around in the room today was Piton. So this one looks pretty ready to me for a pretty big move, actually. I'd be looking, this is actually one of the better setups. I would be looking here for a test of 121 to about 130. And I know that's a high number or high range, but it kind of breaks out above this level. So you have a big resistance level at 117 here on Piton, but you see how these setups are now starting to look pretty idealized. So you have the daily with an upward bias, you have the 130 with an upward bias, and then you have the 1 hour also with an upward bias. Do you see how the daily being in an upward bias is the newest one? So once you get all of these things in confluence, that's when you can really go. You'll have resistance here on Piton at 117. It's been chewing away at it for a couple of days now, and it's been making higher lows throughout that process. So what I'm looking for is a test of 121 and a half, 124, and then lastly 130. The symmetrical move on this takes you up to 130. So on Piton, very similar to Etsy, I like anything that's long here, and I would look to play it that way. Let's do maybe just two more, and then I'll take any questions you may have. So we added Nvidia today. This one's gone nowhere, but we've all had our eyes on it, and I think it's pretty much ready after today. So big resistance level here on Nvidia at 43, where it really has not been able to get above that. It's actually two different um, major Fibonacci levels here. So if you run that swing and if you run this swing, both of them line up here at this resistance level, which it has not been able to get above. It actually closed above it today, and it did so in pretty good volume. And do you see how it actually turned the indicator in doing so? So the indicator had negative momentum. Now it actually has flat momentum. That's a big win. Also, in doing so, you see how the hourly has an upward bias, starting to hold the 21 through here. Now keep in mind, this one's very fresh in terms of still being on the launching pad. If this is going to work out, this is the way it should look. And then on the hourly, or the 130, it's holding the 8. So we went ahead and added Nvidia here. I kept it somewhat simple. Well, I did a few things. So I shorted the 550 puts. I did that through an unbalanced broken wing fly. If you're unfamiliar with those, you can just do a put credit spread, and I think it works just as good. If you are familiar with those, and what I did was I sold 3 of the 550 puts. I bought 1 of the 545s, or 2 of the 545s as protection, and then I bought a 552 and a half. So basically, the structure is you buy 1, short 3, buy 2, and it's an unbalanced butterfly, but I did it broken wing as well. The entire point of that is just to basically make a super put credit spread. So it's going to have very similar properties to a put credit spread, but it's just going to have bigger theta and give me a little bit more different ways to win. So if all of that was Greek to you, that's perfectly fine. Anything long here on Nvidia, I think works. Another trade that we put out there today was the 550, 575, 600 butterfly on Nvidia, and that's for next week. So I know it seems kind of ambitious here, but the idea is that you have this high compression squeeze, which is pretty rare on Nvidia. This level of compression is pretty rare on Nvidia, and we're starting to see just the signs of it trying to break out. If Nvidia doesn't work, I think it's because the market's not working. I wouldn't think it's something specific to Nvidia. So two different trade ideas there. I think the most easy one is just to do the at the money put spread and call it good. But I also like some upside flies into these upper targets right around 75. So we also did the 550, 575, $600 butterfly on Nvidia. So that's what I got for you guys. Just a little taste of what goes on in the room in terms of just the kind of the presentation, the trades and whatnot. A couple more I can leave in your basket is W Day. Anything gene related, so anything related to genetics or genetic stocks, NVTA, Edit, CRISPR, all of those look good. And PayPal. We went ahead and added PayPal, so I'll leave that one on your list. So if you guys have any questions for me, let me know. We'll go another few minutes. John wants to know, am I still using a 2.5 standard Bollinger? Yes, I am, John. Yeah, so the idea with that is the 2 standard deviation Bollingers are going to get hit too often, and it doesn't really tend to act as hard resistance. What I was looking for is something that could act in a sense like a volatility envelope and tell me when we've gotten a little bit too hot, right? And so what I noticed just from back testing was that 2.0, which is the standard setting for the Bollingers, it was tending to get hit a little bit too much. So essentially what it would look like is, the Bollinger would be climbing, and then you'd have the 8. So the dynamic remains the same, but you're just banging up against that Bollinger all the time. And it wasn't really doing what I wanted it to do. And if you understand statistics, a 2.0 standard deviation Bollinger should contain price action about 95% of the time. So 95% of the time the price will remain inside of the 2 standard deviation Bollinger, but I also just found that it wasn't serving my purposes of what I was looking for. So what I did was I back tested a couple different settings, and 2.5 was the one that ended up being kind of perfect. So the idea behind doing a 2.5 standard is it tends to act more like a 3 ATR. So if you use kind of a 3 ATR as kind of your metric for what is too hot, it kind of has that same vibe. The only difference is that I understand the Bollingers better from a statistical point of view. But if you're using a 3 ATR as your metric, I think it's just fine. Basically, the idea is the same. The idea basically comes down to this: when you hit the upper Bollinger, you tend to trade sideways away from it, which lets it keep going up, and then that gives you more room to then go back and hit it again. So, and that's kind of the more bullish action on it. If you hit the upper Bollinger or the lower Bollinger and you just kind of fail through your support levels, then that's a different story. But a good solid trend should hold the 21 at worst and the upper Bollinger, and a very good trend. Look at something like now on a weekly will hold the 8 and the upper Bollinger as kind of an envelope. All right, not a whole lot of questions today. I wonder how you guys find these sessions. I never see them go out in terms of marketing or emails, so I wonder how folks even know that these are going on. But I'm happy to help. NSC. Hey, Chris. Let's take a look. Or NSC. A little bit of dyslexia there. Oh, this is the Rails. Yeah, I'm gonna like this, Chris. I'm already predisposed to like the Rails here. It just popped up on my scan. So on my scan this weekend, KSU, UNP, and CSX came up. NSC did not come up, and I actually completely forgot it was a rail. Um, I like it, but I don't like it as much as the ones that I already was looking at. So since it is a rail, let's just look at the other ones. So KSU here is showing you better strength. You see that? And it has all the same things you're already looking at on Norfolk. So I would probably go more in this direction. This one wasn't as liquid as I would like, so which isn't too much of a problem, but because this one was kind of the highest rated one that I found on the scanner. The other ones that I found on the scanner that I think look a little bit better are UNP, which is going to be the biggest one, and then actually the one that I was looking at more specifically for myself is CSX. So, and I'll just show you what I'm looking at here. So I think CSX might offer a better opportunity, and it's plenty liquid, more so than Norfolk. Although I think they both work. And here's kind of the tell for what it's worth. They're all going to move the same, right? They're all rails. So when you have all these different stocks that are all railroads, they're all going to move together. So what I'm looking for is which one's the best one of the group. So with CSX here, you see how we are above the 8, and on the 130 we're above the 8, and then on the hourly we're above the 8. Okay, so then that's kind of the benchmark you have to beat. And so with NSC, I completely forgot this was a railroad. You see how it's actually not above those metrics. Now I think it'll work. Again, I do want to qualify that because if I like one railroad, I have to like them all. But do you see how just doing a very basic kind of quick work on the sector? You see how the other one was the 8 was already above all the moving averages. You see how this one's not. This one's still below the 50, which is not ideal. You see how on the hourly the 8 is down here when on CSX was up here. So this is just a long way of me telling you that I like the rails. I like transports here, but I would probably steer you more towards the real outperformers in terms of the charts, and that's going to be something like CSX. Oh, looks like you got some CSX too. Sweet. Oh, thanks, Jerry. I Yeah, it seems like kind of an unusual thing to do because if you get received an alert, that means that you're already on the list, if you will. So I appreciate you stopping by, though. Thank you. I appreciate anyone stopping by and checking these out. So I'm going to see if there's any other questions or comments. Stephen wants to look at the cues. All right. Yeah, we'll go ahead and close out with the cues here. So the cues look a lot like the SPY. It's just not as strong. However, they have more coil, so it's a little bit of a trade-off because the cues have been stronger than everything, but now they're actually slightly underperforming. Now, I have this thing called the Fang Index that I made, which is kind of a price-weighted market cap balanced index that tracks all the Fang companies. Essentially, it tracks momentum and technology. If you think about Amazon and Google and Teslas and Apples of the world, these are big, big companies. And if you can put them all into a basket and then just track only those companies, you get a pretty good understanding of what momentum wants to do. The Fang Index actually looks way better than this in terms of potential upside momentum. I'll say this: the SPY looked like it wanted to go higher. We reviewed that at the beginning of part of the session, and I would say the same thing about the Qs. You've gotten over a lot of different levels here. There was the previous highs were here at 303. Then you had really big symmetry. If you guys are into symmetry, I advise that you run this level. So weekly chart, that low, that high, this common low, and it should look like this once you've finished uh, measuring it out. It actually gives you a projected upside target right there at 304. So that's where that green line comes from at 304. And you also had another one, another target at 305. And that comes from a retracement. So there's symmetry and retracements here in this pattern. Doesn't matter which one you look at, it all ends up here, and you're above all of it. So in doing so, you've held trend perfectly. You're above the 8 there, you're holding the 21 here, and you just fired out of an hourly squeeze. One thing I can tell you though is this one, although it looks almost structurally almost perfect, it actually doesn't look as strong as the Fangs. So I have to think this goes higher based on that combination of signals, both the SPY, the Qs, and the Fang Index. But this looks good. I would say that the next target here on the Qs, well, there's a pretty good confluence at 15, so 315. There's a lot of confluence, but I would look for about 310 to about 311 in the short term. Cool. Well, good stuff. Good stuff. Well, thanks for being here, guys. If you are interested in kind of if you came in late and you want to kind of catch up with what we missed, the recording should be up soon. Aside from that, thanks for being here. This is just a little snapshot of what we do in the room pretty much every day. We all send out trades. We all have different ways of viewing the market. So if you're new to simpler trading, feel free to stop by, check us out, and we'd love to see you in there. All right, guys. Thanks for spending some time with me. I'll see you tomorrow in the room. Cheers.